Hey everyone, welcome back to Corporate Decoder. Today we're diving into Voya Financial's annual report, and let me tell you, it's got a few twists and turns that might make your head spin faster than a Wall Street trader on earnings day. But don't worry, we'll break it all down. Alright, so Voya Financial basically helps companies manage their employee benefits and savings plans. They're in the business of retirement solutions, wealth management, and health solutions. Think of it as helping people save for the future and stay healthy along the way, plus they manage investments for other companies too. For the year 2024, Voya is reporting some solid numbers with a profit before taxes of about $800 million. They also tout an even better adjusted profit of around $916 million. But adjusted earnings are non-standard and used to evaluate certain segment performances. Voya divides itself into three main parts: Wealth Solutions, which takes care of retirement plans and individual wealth stuff; Health Solutions, which covers health and other employee benefits; and Investment Management, where they handle investments for institutions and individuals around the world. This includes global distribution capabilities. In 2024, Voya made a deal to acquire the full-service retirement plan business of OneAmerica Financial. This will add assets to its Wealth Solutions segment as well as distribution partnership opportunities. It is expected to close in January of 2025. The purchase price consists of approximately $50 million in cash and a contingent consideration of up to $160 million. This contingent consideration will be based on plan persistency and transition incentives. Last year, in 2023, Voya bought Benefit Focus, a company that provides benefits administration technology to employers and health plans. This acquisition has expanded Voya's capacity to meet the growing demand for managing benefits and savings solutions. Voya is diversified across businesses and geographic markets, which brings in revenue through fees, spread, and underwriting. This is good because it helps them get through different economic changes. Now, before we get too excited, it's important to note what Voya says about forward-looking statements. Basically, they're saying, hey, we're making predictions about the future, but things might not go exactly as planned. They list a bunch of risks that could throw things off, so it's worth keeping those in mind. It is important to keep in mind that these statements are predictions of the future. Many things that can happen may not happen, so be aware that these statements are not guarantees of future performance. One of the biggest risks that Voya talks about is the global market. Things like economic conditions, geopolitical events, and interest rates can all have a big impact on their business. And if interest rates start rising too quickly, or if we go back to a low-rate environment, that could also hurt their profitability. Another big risk for Voya is competition. They're in a crowded market and they need to be able to keep up with the other players and manage the relationships with the third parties that they depend on. They also need to make sure that the acquisitions that they make actually pay off. Voya relies heavily on its technology systems to operate. So if there's a cyber attack, a system failure, or even just a plain old human error, that could cause major problems for their business. And with all the data breaches happening these days, Voya needs to make sure they're protecting their customers' private information. Related to that, in today's regulatory climate, it's critical for Voya to stay on top of all the privacy laws and regulations both in the US and abroad to protect customers' data. Interestingly, the report notes that the financial statements do not reflect any error corrections to previously issued statements. It also states that there were no recovery analysis of incentive-based compensation to executive officers during the year, which means everything was fine on that end. Speaking of money, the report states that the aggregate market value of Voya's common stock held by non-affiliates was around $7 billion as of June 2024, and they had about 95.5 million shares outstanding as of February 2025. This is important because this is used to determine the size of the company and whether it is a large accelerated filer. One interesting piece of information in the report is on cybersecurity. It claims Voya has never had any incidents affect their material information. However, they warn it could in the future. This is important since you should be wary of breaches that could happen at any moment. As a holding company, Voya depends on its subsidiaries for cash to meet its obligations, including paying dividends. These subsidiaries are legally separate and have no obligation to pay Voya Financial's debt. The regulators require the company to have sufficient statutory capital based on the risk-based capital ratio, or RBC ratio. As of December 31st, 2024, the total adjusted capital of each insurance subsidiaries exceeded the statutory minimum RBC levels, and therefore no regulatory action is expected. It should be highlighted that Voya emphasizes its international asset management capabilities. Its investment management business generates revenues from a portfolio of seed capital investments in private equity, collateralized loan obligations, and various funds. The business relies on generating management fees from client assets. Its net flows were positive largely thanks to fixed income, but its net flow for equities were in the negative. The report notes that the company had 10,000 employees at the end of 2024 and emphasizes talent management and market competitive compensation. This may be an incentive for new talent to pick them over the competition. The Privacy Protections Working Group in 2019 is currently drafting a new Privacy Protection Model Act. And that's Voya Financial's Form 10K in a nutshell. Based on this information, the CEO and CFO believe that the company's disclosure controls and procedures are effective. So what's my take? Voya is definitely a player in the financial services world, but they're facing some headwinds. The global economy is uncertain, competition is fierce, and they need to stay on top of cybersecurity and regulatory changes. On the bright side, Voya has been very successful transforming the company to create a diversified, growth-oriented company. It is important to note how volatile the market can be, and things such as alternative investment income and account values can drastically change a company like Voya. One notable risk is a potential credit rating downgrade, which could impact the ability to obtain financing and attract new clients, so you should keep an eye on that. From a valuation perspective, this looks like a strong company with good growth, a reasonable target price range based on a multiple and growth forecast of the stock would be in the range of $80, $90. Given all factors considered, I am leaning bullish on Voya, however, keeping a close watch on those risks. Thanks for watching, and if you found this helpful, please subscribe for more deep dives.